Okay, daily outlook, Wednesday, 11th of February 2026, starting on the DXY. I'm going to say that I really not really liked how price action has been this week. Can't lie, it's been kind of exhausting to read, but we're going to keep it simple and keep it short today. So on the DXY, obviously, we've displaced lower from the midpoint of the range. Right now, we're at this bullish fair value gap that we talked about yesterday and this bullish order block that we could potentially see act as support if we displace higher here. We know why, and it's because we ran out this 3-month week low, and then now we are seeing these act as support. However, on the we can also see that we've displaced from the midpoint of this range, from the swing high to this swing low, and that we have this daily draw on liquidity down here, which is the monthly low, right, that we could anticipate price to continue to expand into for the rest of this month, right? So with that being said, we've obviously displaced from that daily bearish fair value gap right here. That's at the midpoint of this range. And we printed another daily bearish fair value gap. If we are bearish, which is the same as what I outlined yesterday, I would want to see this H4 high, weak high right here, act as a turtle soup, and then this inverse H4 fair value gap and this bearish H4 fair value gap act as resistance, right? Which is what we've seen today during NFP. We have manipulated that high. So if we are bearish, I want to see a continuation towards this low down here, and then also this low and this low, and then potentially long term down here. That is what I want if we're bearish. I am aware that we could potentially see displacement higher here. We could. That's why I don't like it this week. Price action has been kind of exhausting. Feels like we're trapped between two PD arrays, this bullish daily fair value gap and this bearish daily fair value gap. But as it stands, right, we're below this daily, this H4 inverse gap and bearish H4 gap. We've run out the H4 weak high. I would want to see continued displacement towards this low. But obviously, like we just talked about, we could potentially be having, we're just preparing ourselves for the potentiality that we just go the opposite direction. So that's DXY, right? I want to see continuation lower if we're bearish. If we displace higher, then we understand why. Euro USD. So we talked about this yesterday. Now I did take a loss on this trade today, which is completely fine. I think the better thing to do would have been close the trade out before NFP. But to be honest with you, I just didn't want to alter fuck with the trade or anything like that. So I left it open, and immediately NFP dropped, wiped me out, and also took not only 1% that I was risking, but another 0.5% because of spread. So that's why you don't want to trade NFP. But in my opinion, we could have displaced higher towards this high during that news event. So for me, completely fine, is what it is. I've already started the process of journaling that trade. I do have to add my screenshots still, but I'll do that later on. So as you can see here, basically, we've now got this bullish daily fair value gap that today we've manipulated into. We also ran into this daily inverse gap right here that acted as support over here, and this bearish fair value gap that we closed above. So we displaced above them. Now we've come to see them act as support, and you could imagine this being the daily range right here. So like DXY, if we're bullish, I want to see a continuation from these levels. I'm not the biggest fan of accumulation, manipulation, distribution, but if you wanted to, if that's what you were interested in, right, this would be your accumulation right here, and then we manipulated right here, and then we would want to see distribution, something like that, right? But personally, I'm not the biggest fan of the Euro USD price action. Now, yeah, I mean, there's not much else to say for Euro USD other than I probably should have been more aware that this was likely a big consolidation range before NFP, especially after we had this large expansion day on Monday, which was like from here to here. So large expansion day, consolidation ahead of NFP. This was likely just a bunch of chop in here, but at the same time, I don't really regret taking the trade, although that I could have managed it better after we saw more price action. But I'll review all that in my journal. But yeah, if we're bullish, I want to see these levels act as support. Obviously, we've got this H4 inverse gap right here that acted as support. We close back below, could continue to see that act as resistance. And if we do close back above that, I would want to see act as support again, right? But yeah, not particularly liking this at the moment, and I'll tell you why. On the 3-month time frame, you can see that if I get rid of all this stuff, you can see that we ran out this 3-month week high, and I just don't like that. That is where we are on the higher time frame. I don't like that we ran out that 3-month week high, because it doesn't mean, like, we could obviously come to this internal range liquidity now here on the 3-month. So that might mean that we don't continue to expand towards this high right here. And also, I don't particularly like this, right? Looking at it on the weekly, basically, if I get rid of this, we've got this large upper wick on the weekly that ran out that 3-month high. We've got the consequent encroachment, which is the midpoint of that wick, which is key level. And I just don't like how this is what price looks like on the weekly. We've got this clear range on the weekly. We didn't come that deep into it. And then now we're running back up higher into the level that swept the 3-month high. I don't like it. I don't particularly think it's that high probability that we just see price run towards this high next, right? And that's why price action's been it's been tough this week, because it's not extremely obvious. And it looks as if we could potentially be running out that previous week high right there. So if I draw that out so you can see what I'm talking about. Right, we're above that previous week high. It looks as though we ran that out so far. And then we have the previous week low, which we can mark out just for the sake of the lower time frame. So I don't like that we run that 3-month high, and then we've got this large weekly rejection block / wick that we are now moving up into. When you look at it on the daily, however, this is where it gets a bit shaky, right? Because we've got this range here from this swing low to this swing high. We've come back into the midpoint of that range. We've had that daily low right there get swept into this daily key level, displacement above bearish PD arrays, printing bullish PD arrays, and on the H4 we've got all this low resistance liquidity up here, right here, all this low resistance liquidity. So I'm not entirely sure what this that is right there, but my point is, I don't like how it looks on the weekly, but this looks like a market maker buy model on the daily. So if we're bullish, we want to see this level act as a continuation. But to be honest with you, my confidence is not quite there now. We've come this deep into, we're seeing this deep retracement. So obviously if we're bullish, we want to see it push higher here towards these relatively equal highs. And if we close above this H4 inverse gap again, we put in H1 or H4 week low, I'll consider taking that if we sweep it towards these levels. But until then, I want to see more bullish price action here on Euro USD, because I don't like how the weekly is looking. Yeah, and same goes for like DXY. We're at that, like we talked about, we're at that daily bullish fair value gap and the order block. So it's like trapped order flow at the moment, in my opinion. Not completely obvious. And obviously we have so many random news events this week, right? We had non-farm employment change today. We had red folder news on Tuesday. We have red folder news tomorrow and on Friday. So it's just a week that is just a very tough one to trade. So that is, oh yeah, that level I marked out was obviously the weekly, that was the weekly high. Right there, that's the previous week high, this line right here. So we're back below the previous weekly high, which is, it's not ideal, really. I'm going to leave them levels marked out. Well, what I can do is actually, this is what this tool's for, the Spaceman key levels. You can see this purple line is the previous week high, and this one's the previous week low. And then you can see the Monday low, Monday high. We run out the Monday range high, and we come back into the range. So it's not looking that promising. GU, right? Same goes for GU. I don't really like the price action now. I just don't like it very much. On the weekly, right, we've run out that 3-month high on the weekly here on GU as well. So that calls for like a deeper retracement on the lower time frames. Then on the weekly, you can see that we put in this swing high. Typically, the fourth candle after a swing high is a continuation. So we put in the swing high, then we displace lower, and then this candle typically continues. So what we can mark out is this previous week low right here. And notice that we haven't run out the previous week high here on GU. Then obviously on the weekly, we reacted from this bullish key level here that we've had a reaction from, right? Which was in the midpoint of this daily range from this swing low to this swing high. We obviously had that balanced price range that price has come back down into, but note that we have run out this previous day high right here. And we have this low down here. We also have hit this rejection block on the daily, right? And I would have liked to have seen this daily week high get run out if we were bullish. Here on the H4, you can see that we run out this, well, that's the daily high. We run out the daily high. Now we run out this H4 week low into this daily balanced price range. From that daily rejection block. I'll draw it out so you can see. So like I've said before, when you're not sure about what's happening with price action, just start drawing out the key levels, right? And then you'll get a feel for what's going on. So yeah, in terms of GU, I mean, we've got this H4 low, which is a strong low because we've run out this low right here. But it looks like price is like eyeing that low up right there, which would just be the previous day low, right? This is the previous day low. So if we look at the Spaceman key levels on here as well, and that's just the name of the indicator, we've got the previous week high, previous week low, Euro USD run out the previous week high, GU did not run out the previous week high. We've had a one-day range high sweep, and then we've hit that daily rejection block, and we're starting to displace lower. So in my opinion, it's not looking that bullish. No, just isn't. It's looking like we will likely run out this previous day low right here on the H4, which you can also see is this red level right here, previous day low. So it's potentially looking like this could be the right hand side of a market maker buy model. Original consolidation, sorry, market maker sell model, first stage accumulation. This whole area right here is a smart money reversal, and then we could potentially see right, some sort of high get run out in here and take out that low. Especially because we put in SMT at this high. It's an idea, right? So that's GU, right? Honestly, just trying to figure it out. Seems quite sus to me. Not gonna lie. I think price action is kind of sus. And I haven't liked how it's been trading this week. We'll skip Euro GBP. And then we've got USD CAD, which I've talked about as well. This seems like the most promising pair to me, right? If I just clear. We've got this monthly week low down here, right? Relatively equal lows down here with this monthly low. That candle right there, that's the previous monthly low as well. On the weekly, obviously, we had that retracement up into these bearish key levels, and we've displaced lower from here. What I'm going to do is delete that just so it's clearer. We failed to tap into this weekly balanced price range, but now we've got this previous monthly low down here. On the daily, we run up into this rejection block on the daily candle, swept the previous daily high, displaced lower, displaced below this bearish daily fair value gap and inverse gap, right? So we're below that, which yesterday we anticipated that we could potentially run out a weak high into that and displace towards this low. So today during NFP, you can see that we actually did run out. First of all, we ran out the H4 week low, and then we ran out the H4 week high. So if we're bearish, we want to see this act as resistance. This is where I'd want to see displacement lower towards this low and towards this low, which is the 3-month low down here. So I'm actually in a trade right here, but I am going to reassess this position just because my confidence is low in terms of DXY, EU and GU, and using intermarket analysis. Obviously, if EU and GU are both going to go lower, that means DXY is going to push higher, stronger dollar. US dollar versus the CAD is going to be stronger, right? So that would suggest that lower probability that this displaces lower from here. So yeah, if we're bearish, I would really like to see this push lower here. From this like looking at this looks super obvious. Inverse key levels, previous monthly low. Would like to see that displaced lower. And then USD JPY, I would say the obvious strong liquidity is the previous month low. Honestly, it kind of sucks that I've misread this price action, but it is what it is. Previous monthly low down here. We obviously came back up into this range, after running out these weekly lows into this balanced price range, ran out the previous week high and displaced lower. I think the obvious next draw on liquidity is just simply these lows down here on the daily, which is the previous monthly low. And you can see this is market maker sell model. There is a consolidation, smart money reversal, first stage distribution, and then second stage distribution. I think this is the obvious target here for USD JPY. So we can see that we're using these H4 bearish fair value gaps as a level of resistance here. So yeah, that's it for today. Price action is really chopping me around this week, and to be honest with you, I'm quite uncertain about a lot of the pairs, given the higher time frame context. So that's why I'm not giving you a very specific, obvious bias, because I don't really have one. I've outlined what are the potential scenarios, and we'll just leave it at that for today. Like this video if you're also struggling to read price action a little bit this week. Like personally, if we weren't in the high time frame context, this would be a straight up obvious sell right here. It would be like so obvious to take that lower right there. But because obviously we're at that daily bullish fair value gap and bullish order block, there's nothing stopping price from just saying, yo, fuck this, let's just go at that and come for a deeper retracement, right? That's what you have to be skeptical of, right? The high time frames always take precedent over the lower time frames. So with that being said, I will see you in tomorrow's video, and just be careful trading this week. And we've got CPI on Friday. I'll see you in tomorrow's video. Peace.